It would take you 86 years to double your money if you left it in a savings account, whereas investing in equity would only take you 10. My name is Malika Petersen. My title is Head of Fund and Investment Specialist for Old Mutual Wealth. How much risk do I need to take to grow my wealth? Growing your wealth over time allows you to achieve the financial goals that you have defined for yourself. Many investors suffer from inflation illusion, as they don't really notice how destructive inflation can be over time. If we assume that inflation is 6% per annum, you would need 10,000 Rand in 10 years to buy the same amount of goods that cost 5,000 Rand today. Now, the biggest challenge you face is ensuring that you are able to beat inflation and preserve the buying power of your wealth. It would take you 86 years to double your money if you left it in a savings account, whereas investing in equity would only take you 10. A diversified portfolio allows you to have exposure to assets that provides you with the necessary returns while mitigating risk. How long should I be invested for? So what did the release of Jaws in 1975, September 11, 2001, and the global COVID pandemic all have in common? Anyone who stayed invested through it all would have enjoyed a return of 12.48% per annum. In other words, if they'd invested 1,000 Rand in 1975, that would be worth over 300,000 Rand today. Now, to provide context, 1,000 Rand from January 1975 could buy the same amount of goods that over 55,000 Rand would be able to buy today. Investors who did this would have effectively increased their buying power 6 times. I'm by no means suggesting that every investment should be 47 years long. But your financial plan developed with your financial planner will dictate which of your investments are needed for which period of time in order to achieve your financial goals. So money needs time to benefit from the full potential of compounding growth. Start investing as soon as you can and let compounding do the work for you. How low can I go? If Mercedes-Benz were to have a 30% off sale, how many would you buy? Investing is absolutely no different. Many investors try to sell when markets are down, when in fact they should be buying. A market downturn presents the opportunity to obtain your investment at a discounted price. The average investor gets 3 to 4% lower return than what the S&P 500 does over time. This was even worse in 2021, when investors got an average close to 18% return. S&P 500 for the same period did 28%. This is because short-term volatility can often lead to investors selling their investments at the worst possible time. Almost all of the 10 best days on the JSE occurred after bad news or uncertain times. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Market downturns are inevitable, but so are market booms. The important thing is what you do when a significant downturn happens. I have so many people depending on me. How do I prioritize investing? A financial plan developed in conjunction with your financial planner allows you to understand exactly what your financial responsibilities are and how much you have left to invest. It also allows you to identify how much you need to invest in order to achieve your financial goals, as well as the investment return that you should be targeting to address any gaps that may exist. This is why it is important to start investing as much as you can as soon as you can. You need to reinvest any dividends that you may receive and leave the investment to grow until your goals have been realized. This is why compounding does all the heavy work for you. We have a responsibility to ensure that we positively influence the financial futures of others. Investing allows families to collectively create wealth for generations to come.